Morning, guys. It's Tuesday, April 22nd, 5:25 a.m. Central Time. Grain markets are mixed to higher this morning. May corn futures up a quarter cent at 4.82. May soybeans up 7.25 at 10.36 3/4. May Chicago wheat unchanged at 5.38.5. May Kansas City wheat up 2.5 at 5.53 1/4. May spring wheat up 2 at 6.02. Very quickly, Mackenzie, we are approaching 21,000 subscribers on YouTube.
Yes, that's very exciting.
If you guys watch on YouTube on a regular basis and you have not hit the subscribe button, do us a favor and hit the subscribe button. It costs you approximately $0 to do so, and it will help us in a kind of roundabout way. So hit the subscribe button. Okay, let's get into the news. We've got some stuff with the Fed, Trump, some infighting here in the United States.
The US dollar index fell as low as 97.92 on Monday, its weakest level since March 2022. The decline was fueled by rising tensions between President Trump and the Federal Reserve as Trump continued to press the central bank to cut interest rates to boost the economy. Trump criticized Fed Chair Jerome Powell, calling him a major loser and accusing him of acting too slow on interest rates. The administration is reportedly exploring whether it has the authority to remove Powell. The move would undermine the Fed's independence and could rattle global financial markets.
One of my good friends always says the Federal Reserve is not federal and has no reserves, which is kind of factual and in a funny, not so funny way. Here's what Trump said, to be exact, on Truth Social. Preemptive cuts in interest rates are being called for by many, with energy costs way down, food prices, including Biden's egg disaster, substantially lower, and most other things trending down. There is virtually no inflation, with these costs trending so nicely downward, just what I predicted they would do. There can be almost no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Europe has already lowered 7 times. Powell has already been too late, except when it came to the election period when he lowered rates in order to help sleepy Joe Biden, later Kamala, get elected. How did that work out? So Trump is very upset. Trump does not have the authority to fire Powell. He's not going to be able to. Powell's term runs through May of 2026, and Powell has publicly stated, I believe on many occasions, that he will not resign if asked. He has emphasized in many instances that the president lacks the authority to remove him. So what you've got going on here in financial markets, there's a lot going on, but you've got this kind of anti-United States trade, and the decline in the dollar is part of that. You have reduced, call it, faith in the United States and what's going on because of the turmoil, because of the infighting, maybe more so because of the tariffs. So the dollar has fallen. The stock market has fallen sharply. There's a lot of interesting things going on in the bond market. We're going to get into that with Jim later this morning in the premium stuff. The commodity markets have been the beneficiary of this because the dollar is weaker. I think the commodity complex has caught a bid. So as I stand and I look at this, the Bloomberg Commodity Index is up 7% from the April 9th low. We talked yesterday about how the funds bought a whole bunch of soybeans during the week ending last Tuesday, despite the fact that we're in the midst of a full-blown trade war with China. Commodities are rallying. So as it stands here on Tuesday, April 22nd, I'm going to tell you that the trade war has been bullish commodities because it's resulted in lack of faith in the United States, therefore a weaker dollar, therefore higher commodity prices. It's stranger than fiction. You can't write this stuff. I mean, this is not what we thought was going to happen. We've got surging commodity prices. We've got a couple things sharply higher this morning. Gold's up another $44 this morning. Crude's up another $1 this morning. This is not the way that it was supposed to happen. This is not what the narrative told us. The narrative told us soybeans are going to go back to $8 because we're in trade war. Nope, I don't think so. Not right now.
Trade talks between the U.S. and India advanced on Monday during Vice President JD Vance's visit to the country. In addition to trade, Vance and India's Prime Minister discussed regional and global issues. The two leaders agreed to work towards finalizing a trade agreement by the fall, with a focus on job creation and improving citizen well-being in both nations. As part of the proposed deal, India is open to reducing tariffs on more than half of its U.S. imports, which totaled $41.8 billion in 2024. Overall, bilateral trade between the two countries reached $129 billion last year, with a $45.7 billion surplus in India's favor. India is largely self-sufficient with regard to corn and wheat. They produce about as much as they use.
We need India to buy some stuff because they are the largest population center by country. They're bigger than China now, 1.44 billion people as of June 2024. As Mackenzie mentioned, they produce a lot of corn, a lot of wheat, more so, but they use all of it. They don't really export much. They don't really import much. There is one area that they could perhaps make a deal on, and that would be fuel and maybe ethanol in particular. So while India is the largest country in terms of population on the planet, they use only 2.84% of the world's gasoline. The United States has a much smaller population, yet we're using 35% of the world's gasoline. Now, at the time being, India prohibits the import of ethanol for fuel blending purposes. They have something called the Ethanol Blended Petrol Program, which mandates that only domestic produced ethanol can be used to achieve blending targets. They're aiming for a 20% ethanol mix in gasoline by 25-26. That restriction has been a major point of contention in these trade talks. The U.S. trade rep has criticized India's ban on fuel ethanol imports as unfair trade practices, essentially. So you look at this population, biggest population in the world, and then you look at the gasoline usage. Which way is the gasoline usage going to trend from here on out? It's probably going to go higher. They're probably going to start using more and more and more. And perhaps the U.S. can be of some assistance. We have shown you guys the ethanol stocks charts in the United States the last couple of weeks, and we're at like COVID lockdown levels with regard to ethanol stocks, despite the fact that we're exporting a lot. How about we export some of that to India where they could probably use it? That would be nice. So we'll see if anything comes of those talks. You've got a big kind of, with regard to our ag markets, maybe call it untapped population with regard to India. It'd be cool if we could try to make something happen there.
If you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
New crop corn target orders, pretty simple. I discussed my new crop corn and also soybean marketing strategy. And my strategy is really not a strategy. It's, hey, we're going to sell cash here, here, and here. And this is kind of the game plan moving forward. Nothing fancy or elaborate. This is super easy to follow. I take a very, very simple approach to grain marketing. If you think that you would benefit from a simple approach to grain marketing, which I believe that you would, I believe that the industry, my industry, the grain marketing industry, I believe they've drastically overcomplicated something that doesn't need to be that complicated. So I've attempted to simplify it. I kind of ran through my simplified approach and showed you guys exactly what's on my mind. It's super transparent. I break down everything by crop year, and percentage. It's a piece of cake to follow. You guys might want to give this deal a shot. Just maybe you follow it. Maybe you use it as a blueprint. Maybe you just want to see what somebody else is doing to kind of compare and contrast with what you're doing. You can go to standardgrain.com and sign up this morning. I will forward you a copy of this morning's email if you sign up early enough, and you can check out that video. $50 a month, cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. This is an information only service, guys. We don't want to do your brokerage. We don't want to sell you crop insurance. We don't want to sell you anything other than just the information. Give that deal a shot this morning.
U.S. corn planting is slightly ahead of schedule. Planting was 12% complete through Sunday, compared to 4% last week and 10% on average. States that are 20% planted or better include Kansas, Missouri, North Carolina, Tennessee, and Texas. States with 5% of the crop planted or less include Indiana, Michigan, North Dakota, Ohio, Pennsylvania, and Wisconsin. Soybean planting, meanwhile, was reported at 8% complete nationally versus 2% last week and 5% on average. States that are 10% planted or better include Arkansas, Illinois, Iowa, Louisiana, Mississippi, Missouri, and Tennessee. No activity was reported in Michigan, North Dakota, Ohio, or South Dakota.
So the corn and soybean planting numbers were slightly ahead of trade expectations. The corn number came in at 12%. The trade had thought it would be 10%. Okay. And I saw the argument made that this is a big bearish factor with regard to corn prices. Guess what? The crop being planted is an inevitability. It's just a question of when and how quickly. You have some anomalies, like a 2019 was super wet. I don't think we're headed for that. But looking at some weather maps, we've been very dry over the last 14 days, with the exception of that band that caught all the rain that went through largely Missouri into southern Illinois and western Kentucky, West Tennessee, those sort of places. The forecast, though, is a little bit different. A lot of the central and western corn belt are going to be wet. Weighted by production, the corn crop in the United States is going to see 117% of its normal rainfall over the next 2 weeks, but a lot of areas are going to be wetter than that. So it may not be as easy going in some areas as it had been. You look at the exact kind of placement here, and it's not everywhere, but rain's coming back to Iowa, to North Dakota, parts of South Dakota, certainly the Eastern Corn Belt and the Mid-South. And you've also got some rain headed for HRW wheat country in Kansas, in Oklahoma, parts of Texas. So the weather is, there's some rain coming here, certainly the next 10 days. What about wheat?
U.S. winter wheat ratings declined last week, but remain above average. As of Sunday, the crop was rated 45% good to excellent nationally versus 47% last week and 41% on average. The rating came in below analyst expectations of 47% and was also lower than the 50% reported during the same week last year. 21% of the crop is rated poor to very poor. The crop is 15% headed nationally versus 8% last week and 13% on average. The U.S. spring wheat crop is 17% planted versus 7% last week and 12% on average.
Spring wheat plantings out ahead of schedule. Winter wheat ratings are kind of toward, I guess, in the middle-ish of where we've been here the last 5 or 6 years. You look at your HRW country with regard to winter wheat. Kansas dropped to 41% good to excellent. Oklahoma dropped to 39% good to excellent from 44. Texas increased a little bit. Colorado was off a little bit, but just 3 points ahead of the long-term average here.
Brazil and Argentina are benefiting from the global trade war. The U.S.-China trade war has created new opportunities for the South American nations to expand agricultural exports. President Trump's tariffs on 8 of the top 10 importers of U.S. beef have redirected global trade flows, prompting countries like China to seek alternative suppliers. As one of the largest buyers of American beef, China is likely to shift its purchases to Brazil after the U.S. imposed a 145% tariff on Chinese imports. Chinese demand for Brazilian soybeans is also on the rise, with a large purchase already made this month. If the trade war was to persist through the fall, when the U.S. harvest begins, South American grain producers will be well positioned to fill the gap.
There's a lot of this talk out there. Oh my gosh, we're killing our relationship with our trade partners through these tariffs. And maybe that's factual, but at the same time, a trade war and tariffs and policy, those things do not add or subtract corn, soybeans, or wheat, or beef, or pork from the balance sheets. They don't. They don't magically disappear. Now, China may reduce overall demand, and they may do it. They may say it's because of the tariffs, but it may actually be because their economy sucks, and they can use that as kind of a smokescreen if they're going to buy less from the United States. But I'm still kind of hesitant to totally agree with this idea that we're killing our trade partners. I mean, there's only so many bushels of corn, soybeans, and wheat in the world, and those amount of bushels, they don't change with tariffs. So, if Brazil is going to really ship so much more to China, you may just see a game of musical chairs, and you may have to see other countries come to the United States. So I'm not totally convinced that this is as negative for the U.S. as maybe some of these articles would indicate.
U.S. corn shipments were strong last week, surpassing pre-report expectations. USDA reported that 67 million bushels of corn were inspected for export during the week ending April 17th. The print was down 7% compared to the previous week, but up 2.5% versus the same week last year. Soybean shipments were reported at 20 million bushels. The print was down 1% from the prior week, but up 24% compared to the same week last year. Wheat shipments surpassed expectations at 19 million bushels. The print was down 17% from the previous week, but up 13% versus the same week last year.
These are really strong. That's a great corn shipment number. Even the soybean shipment number is seasonally pretty good. We trend lower with regard to soybean shipments this time of year, but it's seasonally pretty good. Wheat shipments good also. I think if this continues, USDA is going to have to come up with that corn export number again. What did cattle do yesterday?
Cattle futures were lower. Live cattle saw losses ranging from 5 cents to 32 cents, with the exception of the August 26 contract that gained 7 cents. Feeders were $1.07 to $1.77 lower. Box beef prices were higher. Choice was up $2 at $333.52, and Select was up $3.22 at $318.77.
Some movement in the outside markets this morning. The stocks are attempting a recovery. The Dow Jones is up 315. The S&P is up 50 points. Bonds are about flat. U.S. dollar is up just a little bit. Got beat up yesterday. Crude oil is up $1. Gold is up $45. $34.70 in the June COMEX contract, traded up to $35.09, which I believe is fresh all-time highs overnight. Lots of buying interest there. Everybody have a great day today. We'll be back on Wednesday.